Let me just try something. Is this audio better or worse?
Well, we're already live, so our fans will tell us.
Welcome, ladies and gentlemen, to the Daily High with your host Matt McGregor and Tobias. Hey, we've got Mark Woods here. Hello, mate. How are you?
Hey, how y'all doing?
Good morning, Tone. How are you, mate?
I'm good. I'm checking our live stream to make sure everything is working. Yeah, it's gonna be a good show. I've been meaning to, have like 100 tabs open to see if the market has topped. And we're going to find out today. So this could be a longer format show. Matt, kickoff, brag about being right. And then Mark Wood and I will do the long format like we usually do.
Sounds great, mate. Sounds great. I'm going to get into my spiel starting on the 4-hour time frame. All right. So, last week on Wednesday, I said, I put this black line in. I said, I put the black line in on Thursday, but on the Wednesday show, I said, this is a buy. This is a buy. I'm not taking it, but it's a really good buy because I really like that we had been putting in these, lower highs all the way down. And this looked like a higher low. And I said, it's a really good buy because there's a really defined stop loss, which could be, at 105, 106. And then I said, or even like the MRI support and resistance zone here, the green dots are a good enough stop loss to put in. This is worth a punt. And on the very next night's show, we were at 109. And I said, this is on Thursday. I said, this is still, for me, a really, really good buy. And you can use that black line that I've put in as your stop loss now that we've moved it. I liked it better yesterday, but I like it just as much today. And I also said that I think that earlier in the week, I said, I think we need to get above this black line. When we were approaching that black line, when we came up on that rally, this was on Monday's show or Tuesday's show, I said I wasn't keen on this run up until we got above that black line. And then I said, once we've dropped down, put in a higher low, and we rally from this point, the second attempt, I think that will blow straight through it. I loved this whole structure from the whole week of last week. It's pretty spot on. Now we've stalled out on an MR 4-hour time frame, which is significant, but it's nothing because we've just come back down as it stands right now to almost kiss on the 7 simple moving average. Really like it completely. This is your chance to buy back into this move that I really think has changed the market structure, where we were putting in. This is the fear in all markets when we just go, higher low, lower high, lower high, lower high. It turtles all the way down until it crosses above the moving averages, and then it uses those moving averages as support, which is what it looks like right now on the 4-hour time frame. The daily time frame is much the same. We had that pretty significant drop. We had a drop that came all the way down into the 200s, below the 200 simple moving average. We rallied to the 30 simple moving average and were rejected. Came back into the 200, rallied to the 30 once again in the conjunction with the 50. We drop back down to the 200, put in the clear high low. That's a market structure change. And we've rallied. We're now above all the moving averages on the daily as it stands right now. Wouldn't surprise me at all if we came back down to retouch on the 7 simple moving average at 111. I still see that. The same way I said last week at the black line, that would be a buy for me as well. I think that the market structure has changed. But if you go to like the weekly, there's still the caveat, I suppose, that the wave is still red, and it's still red until it ain't. The moving averages, the higher time frame moving averages are still moving up. They're still rising. That's fine. We were able to sustain the 50 simple moving average. We never closed below the 30 simple moving average. Very good. We didn't open this week above the 7 simple moving average, which would have been for me the ultimate signal to be above every single moving average from the 7, the 30, the 50, to 200 on the weekly time frame. I always say when you're above all 4 moving averages on Alphametrics, there's nothing to do. You're long. You're bullish. But we got bloody close to it. All right. So, even if we return to the 30 simple this week, I would still see that as that range that we've been stuck in forever. But all in all, I'm feeling really, really good. I really wanted to see the copy curve. Really wanted to see the copy curve cross below the 0 mark. I said this for a month now. I want to see it cross below the 0 mark, but just by a hair, and then re-up. And the re-up mark, and I don't know if you know this about what we do here at alphanumerics. But that crossing above the 0 line is built into the alphanumerics indicator, which is these purple phantom signals, which you can see the purple candles back, all these purple candles. They're really terrific. It's like, yeah, I know, right? These purple candles are the start of the next run, as far as I'm concerned. And we almost have created a new purple phantom. If we just cross below the 0 and then cross above the 0 again, we'll get another purple phantom here. And this is where I want the purple phantom as well. I want the purple phantom to come in after fucking 4 months of consolidation, 6 months of consolidation in the same zone on the top to give us a purple phantom to push us into the end of the Q1, into Q4 and Q1 of next year. Rally, boys, rally. That's what I'm still seeing as a possibility. You guys can talk about the MACD and all that jazz. That's where I'm sitting. I'm coming off screen share now. So take your fingers out of your noses. Coming back to the general chat. I think
Matt, I have a question about that. I have a question about that purple candle. Will that not print unless the copper curve goes below 0, or will it? So if
it doesn't print, it's okay. Yeah. And this is the cool thing, Mark. I'll show you something too, because the last one we got is still valid. Do you know what I mean? Like the last one we got back on the 19th of May, we're still in that phase of the purple phantom. It has not crossed below 0, and the cross below 0 will look like. I'll just bring this across slightly. Like the cross below 0, so tight now. Like it can be just a few weeks. It can be devastating. Do you know what I mean?
Yeah.
It can be months. It can be the end of cycles, or it can just be like a little juice before the kickoff again. It's not. The indicator wasn't built to be like when we cross below 0, it's a bear signal, and when we cross above it, it's a bull signal. It's not that simple. I don't look at it. I look at it's like, well, we're up at the same high levels up here. We're above like 208 and it's starting to round down. That's when I'm starting to pull the trigger on these. It's not being and I really use the Copic curve. The EXA as a good comparison. Like when the EXA and the Copic curve, they're rounding the tops at the same time. See? And when the EXA crosses, I'm like, I'm out of this market, right? And that's the same time where you'll see that the Copic curve is rounded to the top as well. I use that as my exit to the inverse to that purple signal, not just crossing the 0 line,
and so
which is cool.
So the EXA is on the verge of crossing bullish again right now.
Yeah, it is on the verge of crossing bullish again, but it's not on the verge of crossing bullish again from like a vantage point of like -3. It's just like that's what our consolidation will get you. Where we went bullish. It's like it's very indecisive in this point. I like it when it's like this. That's what's I like the phantom signal, the Copic curve more for your buy signal, and I really like the Copic curve for your exit on the weekly time frame. So to answer your question, we came back down to the same prices in which the previous phantom signal is still in play.
Yeah.
And yeah, it had a rally of off that from top to bottom of your 16%. I would if we don't get another phantom, I still feel that the previous one's still in play because it didn't have its bearish cross. Does that answer your question?
Yeah, absolutely. And one thing that's really interesting, go back to the EXA real quick.
Sure,
you're getting the same bottoming pattern. No, the EXA.
Oh, sorry, man. Yep. EXA. Good man.
You're getting the same bottoming pattern as March. You're getting a W with a potential higher low.
Mm-hmm. Maybe here. Is it about there?
March 2025.
Here. Oh, the higher low structure. Yeah, that looks
significantly higher low. So I'm just gonna add a couple of comments real quick. I know you guys don't see me in the video. We got to figure out how to put 3 cameras on the side of the panel. I haven't figured that out yet. You're gonna get your cross, Matt. You're going to get your Copic curve cross because you're using the weekly Copic curve and it's very, very slow to react. So unless the price of Bitcoin rallies to a new all-time high this week and stays at new all-time highs for the rest of time or for the rest of, let's say, for the rest of the year, you're going to get your cross. We're probably going to cross next week or the week after. and then you can get a cross for like 1 week. I think you're going to get it. I think a purple candle is coming. Your phantom candle is coming.
I agree.
In the middle of November.
Too.
Hey, Matt, really quick. I'm curious. Do you have like a 4-day or a 5-day chart?
Man.
Let me see one of those.
Sure, I can bring up a. I can bring up a 4-day chart. Sure.
Yeah, let's see. Okay, now go to the copy curve.
And what do you want? Yeah, the copy curve looks neat. Yeah.
No, that's the EXA, the copy curve.
Oh, sorry.
So do you have this? Do you have that purple phantom candle set up? Look at that right there.
Yeah, it's about to cross over. It's about it will give you a purple candle. At the next all-time high gives you a purple candle.
Yeah, it won't though on alphanumerics because alphanumerics is pegged to the weekly. Like if you go into the settings of alpha, I'll just show you. This is might as well make it an alphanumerics commercial. But if we go into settings and you go into inputs and you scroll down the bottom, you'll see swinger and investor mode, right? So swinger mode is correlated to the weekly time frame, and investor is correlated to the monthly. So I use investor definitely. I love to look at the investor on the monthly time frames for stocks, and definitely swinger for the bitcoins, of course.
So my point in doing that is I still really like the 4-day or the 5-day chart as a quote weekly for Bitcoin, just because it's 24/7. And seeing it dip below the zero line there and about to reverse, to me that is almost as bullish as getting the signal on weekly, even if it doesn't cross the zero. What Tone is saying.
Well, I mean, I could chart this for you all day. This looks brilliant. I mean, we resisted the 50 simple moving average on the 4-day. We've got 9 hours left to close above all the moving averages. I love it on the 4-hour time frame. Yeah. I think that the market structure has changed. I like Bitcoin here. I like it on the 4-hour time frame. I'm coming off, guys. I've been on way too long, right?
Yeah.
I would want to.
I learned something.
I'm going to go. Yeah, man, you're talking to the best of the best here in Tokyo. Hey, please like and subscribe. Please share it with your friends. Enjoy the rest of the show with the fabulous Mark Woods and Tone Base. I'm going to be watching as well downstairs with a beer in my hand. I'm getting off. Good night, ladies and gentlemen.
All right, great to see you, Matt. Tone,
all right, later, Matt. Have a good night.
Tone,
you too, mate.
The chat asks, how are we sure this isn't just another dead cat bounce? What's your answer to that?
I answered that. If you scroll like 2 more comments.
Okay, perfect.
Oh, yeah, so this is what today's show is about, really. Okay, so I'm gonna jump on my screen share, and I'm gonna just since today's Monday, I want to comment real quick on what I see in the price. The monthly chart is giving us this massive reversal candle, but it's happening in insane consolidation with a 7 on the MRI. I still think we have 2 more months of upside. I'm still expecting an MRI blow off top at the end of December. And if that doesn't happen and we consolidate into an MRI, then I'm expecting 6 more months of bullishness in the price of Bitcoin. The weekly chart is, here's our new candle for the weekly chart. This current candle is misaligned. The weekly chart is now back above all of its moving averages. It has one hurdle of 120,000. If the weekly chart can get above 120,000, the world is all right again. And that would also give us a green star candle where we can still get a green star candle on current candle. All we got to do is close at a new swing high, gives us a green star candle. We'll probably break the count tomorrow. I'm sorry. We can't get a green star candle this. The only way we're getting a green star candle this week is if we go to a new all-time high. So that's unlikely. So we're going to delay the green star candle by 2 more weeks. As long as we slowly continue to go up, that's a good sign. Now the daily chart, this is interesting. This is our MRI warning candle. So the MRI top is coming next candle. You can see how all the prior 3 MRI tops have perfectly reversed the market. And I hope that this one does not reverse the market. You can also look at MRI buys. Look at the last 2 MRI buys reverse the market to the upside. And technically theoretically there was an MRI buy right here at the lows. If you look at the Binance chart, I think this is the Binance chart. You can see it right here. You'll see an MRI pop up. There it is. And I was talking about this in real time, that some exchanges will have an MRI buy here because of how the index was just closed by a few dollars off. So I always treated October 17th like an MRI buy and support of 200-day moving average, and it reversed absolutely perfectly. Now, the question is, what will the MRI top do? That's going to happen tomorrow. I think it's going to consolidate the market and set us up for more upside. The main reason why I believe in that is because of the S&P 500 constantly making new highs. You can see the massive gap in the S&P 500 this morning. Holy shit. So S&P at new all-time highs will bring Bitcoin to new all-time highs. I just don't see how it cannot possibly do that. Now, there is an extension C in the futures market. And yeah, I still, the S&P daily is going to have an MRI top tomorrow, just like Bitcoin will. But again, I think it'll be a small pullback. The market's crashed. Trump, I guarantee you, Trump has put his tail between his legs and canceled the sanctions on China, and probably did the same thing with the government shutdown. I haven't been paying attention to that because they're always bullshit. Mark, you're in the area of the government. What's going on with the shutdown?
It's still in full force, and I am in the heat of it. Some local stores, they're feeling it because there are a lot of government employees in our area, and they notice, like one of the places that I love to go shop for some bourbons. I'm really good friends with the store owner there, and he's like, "Man, we're feeling it. It's slow," and I don't see any end yet.
So here's my problem with the government shutdowns. These government employees just get a vacation. They don't have to work. They don't get paid. But then when they go back to work, they get paid for all that vacation that they had. So this is what pisses me off about it. If these people didn't get paid and didn't get back pay for not working, then it's a real government shutdown. Other than that, it only hurts honest people that don't work for the government.
Exactly. That's exactly right.
Right. So someone is asking, they want the market to consolidate for a few more months to put the 4-year cycle nonsense to rest. The market would have to consolidate for about 20 more months to put the 4-year cycle to rest, not a few more months. It'll have to consolidate for 2 more years. People don't understand what the 4-year cycle is. The 4-year cycle is, most people get the 4-year cycle wrong. Here's what the 4-year cycle is, because I show you the chart all the time. The 4-year cycle is from halving to halving. And as long as you get a bull move, make a top, make a full bear, and recover and start to go up before the next halving, the 4-year cycle is in full effect. The 4-year cycle will end in 2028. So as long as we get a market top and complete the bear cycle before 2028, the 4-year cycle is still with us. So consolidating a few more months will not change anything. This is why I have all of the cycles in one chart, and my starting point is the halving, because only after the halving do prices take off in a real bull market. We are still in the bull market. Now, we're going to talk about if the market has topped, which I don't believe that it has, but we're going to take a look and dissect that. Okay, short-term chart, I don't really care. This is more of a longer-term picture. I can't believe how high the S&P 500 is up. I think the alt season has ended, and Bitcoin will rally to new all-time highs in dominance versus all the shit coins, including Ethereum. I believe gold and silver have topped, and I'm expecting a 30 to 50% corrections. Silver has already corrected 15%, and I'm expecting silver to correct at least 30%. So I think silver will go down to at least $35. I called the silver top perfectly. Here is the weekly MRI top with the extension C and extension A. And here is the monthly MRI warning candle with a reversal. And the MRI top candle will come in next month. So silver has been a little bit better than gold, because gold still has 2 more months of upside, but I don't believe it'll break the intra-month high. We may get a higher monthly close next month versus this month, and I still pretty sure we're going to print an MRI top unless gold crashes all the way to below 3,500 in the next 2 months. I want to see that MRI top print. It'll be the 3rd consecutive MRI top in gold on the monthly chart, which is amazing. But silver did not do that. Silver only printed a second. No, it wasn't even going to be a second. It's going to be another first MRI top because there was a break in the count. But it's almost like the 2nd consecutive. So silver started its bull market late, but it caught up quick. That's why silver has a crazier bubble looking chart. And I was telling everyone that this is a bubble, and S&P is still linear, slowly rising, but this is a bubble. But all the gloom and doomers think that this is not a bubble, but the S&P is, because they're fucking crazy. Okay.
Hey, Tone, go back to the gold monthly real quick with the MRI on it.
Yeah.
Okay, so I just want to show people something that what Tone mentioned with the MRI going to 3 consecutive tops. That's one thing in itself. Even just two runs. Look at the extensions. Look at the extension B, C, C, A. This is something that I think a lot of people miss in MRI, is how important those extensions can be in showing us how exhausted a move is getting, right? When you have 4 of those extensions within 3 runs to monthly 9s, gold was, I mean, it was in ludicrous mode and running hot, but it was very clear that it was coming to a top.
Right. So keep in mind right here, right? So all of these extensions that you see, all of these extensions are coming from, there are 3 here. There is an extension coming from, I don't think we ever canceled it. Right here, there was an MRI top here. This MRI top created this extension A, this extension B, and this extension C. This MRI top right here created, let me move this over. This MRI top here would have created, what was it, that one? Sorry, see, my numbers don't go back far enough.
Yeah.
This, hold on. 1, 2, 3, 4. Okay, this extension, this MRI top did not create any extension. There's a reason for this. Is because this MRI top had a -1 under it. So this is one of the things that separates the MRI from the Tom DeMark sequential. In case people were wondering, is an MRI a copy of the Tom DeMark sequential? It is not a copy of the DeMark sequential, because the DeMark sequential would not have shown you a top on this candle, but the MRI did. Okay. And that is why this candle did not kick off any extensions. I know why that is, because I built the code, but you guys do not. So this MRI top kicked off extensions that ended here with A, here with B, and here with C. And then this MRI top kicked off another set of extensions. C ended first, which is very rare. C ended first, then A ended, and B is going to try to end either next month or the month after with the final MRI top.
Yeah.
Okay.
I think a simple way to break it down is, and this is just a blanket statement, but if you see 2 consecutive runs to an MRI top on any time frame, it doesn't really matter. With a few extensions in between there, you have to be very cautious. Extensions are like a cheat code that I think a lot of people bypass in trying to understand your indicator, but they're brilliant.
Right. And there is a 5-hour video that explains all of it. Now, keep in mind, we are also on a yearly MRI top in gold, which is crazy.
Yeah.
This is why I've been screaming that gold is topping in Q4. We have a monthly, we have a weekly inside a monthly, inside a yearly, and the daily will be all over the place because of how crazy the higher level time frames are. But I am curious, and yeah, the daily kind of topped with extension C. But it's hard to time the daily with, when the weekly and the monthly are doing that. I am curious if silver is also on a yearly top. It is not. It's actually probably not even close. Well, it's got 2 more years. So they're a little off cue. Look at how silver topped on the MRI top back in 1980 and then again in 2011. Isn't that crazy?
Yeah.
And we are going to print a yearly top in silver. Guys, I think silver is going to be going down for the next 5 years. I think this top in silver, I mean, all of these gold and silver people are going to be making up excuses of how the market is manipulated in 2029 because none of them sold right here at 55. Dude, this is what I've witnessed. I've watched this happen for 15 years, how they were making excuses on silver's manipulation, right?
Yeah, it was just a huge accumulation period. Like,
right. I mean, I debated this with Max Kaiser many times on his own show because all throughout, like the 20 teens, Max Kaiser kept screaming how silver is manipulated, and I'm the only one that's on his show telling him, no, it's not. It's just a bear market. And get ready for another one.
That's true. I mean, one of the things I say all the time is technical analysis over fundamental analysis, and the TA is always going to tell you what's going on. And yeah, I mean, Jamie Dimon got caught doing some crazy things in the silver market, but that's not going to cause.
No, but that's also bullshit, right? Because no one reads beyond the headlines. People are like, HSBC gets fined for manipulating gold prices. But if you read the article, they were manipulating them to the upside. like the gloom and doomers never actually read the article. They only read the headlines.
That's exactly right. Well, it's interesting because I kind of wish we were doing this stream a few days ago because I would have had a little bit different narrative than I think what we're going to bring forward today, just because of this move that has recently happened.
I know.
But I still wasn't fully bearish because the metrics that I need to see to get bearish have not triggered at all. We will take a look at this, but I still think that the bull market is secure. I believe it's probably getting around 98 to 100,000 right now. However, there are things in place now where we really do want to see 106 to 112,000 hold higher time frame closes. If a week closes below 110, okay, maybe, but we really need to have a base now higher than 100K, which we'll take a look at.
All right, so Mark, I know you're on the show. Everyone wants to see your charts. No one wants to see my charts, but we need to, I really want to close like 25 tabs. So you're going to hang in there with me as I go through and try to figure out, assuming these tabs work. Oh boy, that is not how we should be looking. Something is wrong here. I'm having a... Did we lose Mark? Yeah, Mark, why did I lose you? Something's off here. Hold on. I don't know why. When I do this, there we go. That's better. Okay. I don't know why that. Is your audio working? Say something.
Yes, I'm here. Can you hear me?
Okay. Okay, cool. So this is loading. These things are loading. So this was an article that I wrote for Bitcoin Magazine in November of 24. So this was a year ago, because November 1st is like 4 days away. And in this article, I explained why I was crazy bullish and the bull cycle is about to start. And I provided 3 reasons. And here they are, right? So this was my... you know what? I'm going to let the AI read it real quick. Let me know if you guys can hear this.
Not hearing it.
You're not hearing it?
I'm not hearing it.
Shit. Live chat, did you hear that? Oh man, that sucks. How do I get computer audio to work?
Yeah, live.
No, nobody heard it. Shit, that sucks. Okay, I got to figure that out somehow. Okay, anyway, I wrote an article how I was expecting Bitcoin to... okay, price action is about to close the daily, weekly. So I explained all the reasons. And my targets were as follows. I was very bullish. As a Bitcoin analyst for 10 years, the current environment has me as bullish as I've ever been. The current price action is very similar to January 2017, breaking out above 1,000, which topped at 19,000 later that year. So I had a little bit of a concern because I kind of have to just throw that in. The biggest concern at the moment is groupthink because everyone was kind of bullish. So that was my concern. Personally, I don't see anything concerning in the TA charts. On-chain analysis, the 4-year halving cycles, the mining industry, and the regulatory stuff. Perhaps there is a greater risk of a short-term crash on Kamala winning the election, which didn't happen, as many are buying into Bitcoin anticipation of greater regulatory acceptance under Trump's administration. In addition, there are rumors of a federal government selling over 60,000 Bitcoin from their holdings of over 200,000. So these were the minor concerns. My insights were that the 2-month chart printed a green star candle, and that gave me a target. I don't expect it to be different this time. It suggests a top in Q2 of 2025 of 140,000. We came close. We went to, remember, the price of Bitcoin at this time was like 60,000, right? So me saying 140,000 in Q2 was pretty good. We hit 119 in Q2, right? So we came almost to 140, but our starting point was 60 when I was writing this. Now, I also had a cup and handle target of 105,000, and we reached that very quickly. And then I had a Fibonacci target of 102,000, and we reached that as well. So these were my targets. At the time that this published, the price had just jumped to 70,000, but I was basically saying this for the entire week before I wrote this article when price was 60,000. So that was my expectation of the bull market. If we go back a little bit further, I did this presentation at BitBlock Boom, and you can see where the price is right there. This presentation was put together on April 20th, 2024. So about 5 days before the halving, okay? And this was an on-chain reasons as to why the 4-year cycle is about to take off and why the 4-year cycle is here, okay? And now we're going to see if the market has topped. So let's go through this presentation real quick, and I'm going to look at the current situation. So the first slide in this presentation talked about how the ETFs are buying up Bitcoin. This is really, really important because Bitcoin reached a top in 2021. And then we had the mining ban. And then Bitcoin price came back and printed a slightly new high at the end of 2021. But what I wasn't paying attention to, unfortunately, was the simple fact that the ETF, the only ETF at the time, GBTC, was not buying any Bitcoin. So when we got the top in April, look at how much Bitcoin GBTC is sucking up out of the exchanges. And when we got the second top, GBTC did not contribute at all. In fact, it was selling Bitcoin like the 2% a year maintenance fee. So this played a big role. So I expected the current ETFs to buy up a lot of Bitcoin. So here's what the ETF picture looked like in April of 2024. So about a year and a half ago, the Bitcoin ETFs had just launched. They were around for 3 months. You can see GBTC is still holding the most Bitcoin at 300,000. BlackRock is only holding 269. And in total, the Bitcoin ETFs are holding 841,000 Bitcoin. What are they holding today? Today, they are holding 1,356,000 versus what they held right before the halving, 840. So they've added about 500,000 Bitcoin in the last year and a half. And I don't see this trend slowing down. Look at October. October has purchased more Bitcoin than September. August was pretty flat. So I don't see why the ETF slowing down. And unlike the last top where the ETF had completely stopped buying Bitcoin going into the final top, this time around, the ETFs are continuing to accumulate Bitcoin. And therefore, this is still keeping me. I'm gonna close this tab right here. I'm going to slowly close tabs as we go. And this is what gives me confidence that the bull market is still with us. So that is the ETF side of the equation. Mark, if you want to comment, just jump in.
Yeah, I did have a comment on the ETF. It apparently, like from what I've seen on-chain analytics and whatnot, it's really looking like a lot of Bitcoin is exchanging hands from OGs, early adopters, into the hands of the ETFs right now. You know, which has kept the market at equilibrium. The selling, it seems like there's a lot of people selling anything above 100,000, but it's going straight into the ETFs.
That's fine, right? Eventually, OGs will not have Bitcoin to sell to the ETFs, and where are they going to get it from them?
Exactly.
Right, and then the price just triples.
Exactly.
Of Bitcoin. So then the next point that I made in this presentation was corporations will continue to buy into Bitcoin. So let's take a look at that. So I don't remember when this screenshot took place, but at one point, MicroStrategy had 91,000 Bitcoin, because I do these presentations all the time. And then at a future point, MicroStrategy had 152,000 Bitcoin. And I think this is my last screenshot. When I did this presentation in April, MicroStrategy had 214,000. When I did this presentation back in April, this would have been the latest screenshot for MicroStrategy. Let's see where they are today. Today, MicroStrategy is at 640,000 Bitcoin. And once again, there is no rumors about them selling Bitcoin. MicroStrategy continues to buy up Bitcoin. Let's look at other private companies. Mara is in second place, XXI, and then I should probably put these next to each other. That would have been nice if I did this next to each other. I may have to do a different screen share, but let's just go back and forth for now. I'm going to close the ETF window as well, so I have the latest tab. This latest tab. So Mara, which is Marathon, and then Tesla comes in third. Oh, what happened here? I should do this in presentation mode, actually. Actually, no, it's fine. I'll keep it this way. And now you can see there's another company that came in right in the middle, and Tesla is all the way down. Where the hell is Tesla? There it is. Tesla is now in the 11th place. So my rationale was more and more companies are going to be acquiring Bitcoin. Now, this is private companies. To see private companies, you need to change something. I don't actually remember. Hold on. Let me refresh this page. Somewhere. Oh, here they are. Private companies right here. Private companies. Block One still has them. What a scam that company was. Tether now has 87,000 Bitcoin. Where was Tether at the time? Right there, 75. So Tether is increasing. Mt. Gox seems to be gone. Maybe they finally handed it out. That's okay. So anyway, companies continue to buy up Bitcoin. My next assessment was that countries are going to start to accumulate more Bitcoin. El Salvador was just the first example. And El Salvador had 2,000 Bitcoin. US had 41. And I don't believe Ukraine has any, but they are still listed. But if we now go back here and we look at government entities, the United States now has 326, but they did steal a lot of it. China is now considered having 190. Ukraine still has the same number, which I never believed back then. UAE has picked some up. Wow, that's cool. El Salvador has increased its holdings. Bhutan has picked up a bunch. And other countries are now, having some big. I know Germany sold because they're not very smart. So countries have accumulated, and I don't think US wants to sell any according to what they plan to do. So that part continues to be bullish in my view. I thought that Latin America was going to increase its presence in Bitcoin. That has not yet happened yet, and I am here in Latin America. I'm sorry, China did have some. Here are the latest numbers. My bad. So here are the latest numbers. So the UK apparently has sold, and Germany has sold, but that's Europe. El Salvador has increased. Other countries have increased. US has increased, but again, they stole it, and China has not changed. Those were, I didn't scroll far enough. Now we get into the more on-chain metrics. This is interesting. The number of Bitcoin addresses with one Bitcoin was above 1 million. And I said that, hey, when Bitcoin is trading at $60,000, which is actually it was less than 60 at the time. What was the price of Bitcoin? Let me go back to my first slide. The price of Bitcoin was, oh man. What was I have to go to a Bitcoin chart. Shit, I don't have the price of Bitcoin.
What was the
I kind of have it, but it was like 60,000. Well, what was it right before the halving, Mark? Can you look that up? Price of Bitcoin on April 20th, 24, because I don't have a price of Bitcoin chart here.
Yeah. You know, I actually use Grok for this now a lot. Instead of going to the chart, It's so much easier. 64.9.
Okay, so Bitcoin price was 64,000, and I said was, if Bitcoin is at that price, then higher net worth people can accumulate 1 Bitcoin. And this is interesting what it looks like today. So here's what it looks like today. Let me drop the price of Bitcoin, or I'll leave the price of Bitcoin. So today, there are less than 1 million addresses with 1 Bitcoin. But that also makes sense because the price of Bitcoin has doubled since that day. But the price of the Bitcoin retained, 1 million addresses with 1 Bitcoin until Bitcoin broke the new all-time highs. And then, again, people once their wealth doubled, they started to lower. I think the number of addresses with 1 Bitcoin has peaked forever. I don't, I'm not, had Bitcoin stayed in like this $50,000, $60,000 range, we might have gotten to 2 million addresses. But keep in mind, this is still almost 1 million Bitcoin locked up, right? People love being whole coiners, okay? So this is 1 million addresses. Now, some of these addresses will have, 1,000 Bitcoin in them, but the reason why this goes down is because someone either split their address that had more than a Bitcoin in it, or someone that finally made it to 1 Bitcoin said, you know what, it's okay if I'm not a whole Bitcoiner, I'll sell some and upgrade my standard of living. So I actually think the number of addresses with 1 Bitcoin has peaked because it's not easy for somebody today to buy a full Bitcoin. You need $100,000. And that's a lot of money, especially if you're not, living in Dubai or some parts of Europe that haven't collapsed yet, and like the United States. It's very, very challenging. So I think this has peaked, but I don't expect it to go down much. So this could be, this was still very bullish for me at the time. I thought this would continue to rise, but now that price has already doubled, I'm not surprised that it's fallen. Any comment on this, Mark?
No, actually, no. It's really interesting. I do have one comment. When you said the addresses holding 1 Bitcoin might have peaked at 1 million. Wow, you might actually be right about that. Although I do think that as well, as companies buy Bitcoin and nations buy Bitcoin, but still, yeah, you might be right about that.
So the next chart I was looking at was Bitcoin Lightning capacity, because once Bitcoin enters the Lightning Network, it kind of pretty much stays there. So the more popular the Lightning Network is, the more Bitcoin would get sucked into the Lightning Network. And let's take a look at where it is now. Back right before the halving, we had 4,600 Bitcoin in the Lightning Network. But remember, the price of Bitcoin has doubled since that day. And now we'll go take a look at what that looks like. I'm going to close the 1 million chart because I kind of want to go through these tabs. And we are actually lower. So the number of Bitcoin in the Lightning Network has dropped, but the value in the Lightning Network has increased. It's not at its peak, but it increased since that presentation, because that presentation was back here in April of 24. So there's more wealth in dollar terms in the Lightning Network, but less Bitcoin in there because the price of Bitcoin has doubled. The Lightning Network has not been as popular as people really wanted it. I still prefer on-chain Bitcoin anyway, but I still think Lightning Network has an opportunity to grow, and it should suck in more Bitcoin as this bull cycle continues. So I still see this as more bullish for the price of Bitcoin than bearish, but it's also not a big difference, right? It's just like 1,000 Bitcoin. So this is a very, very minor thing for now.
Hey, Tone, real quick. Ken from Florida made a good point. He says that as the ETFs grow, the addresses with 1 Bitcoin will go down because those.
Yes.
Yeah. And then going back to the Lightning Network really quick, I saw something on X about people making a legit like dividend return staking their Bitcoin in the Lightning Network. And I met with Tone down in Miami a couple of years ago and got to talk with a couple of one Lightning Network developer who literally blew my mind. This guy is an absolute genius. And I still think that the Lightning Network is in its infancy and will be one of the most important developments in Bitcoin as time goes on. But we'll see. I remember when that first started and OG Bitcoiners were willing to stake their Bitcoin in the Lightning Network, and it was literally getting lost. Like they were losing Bitcoin, and it was still relatively valuable at the time. But these were people probably who had bought really early, who had a couple hundred Bitcoin to spare. But now,
it happened to me. Did you ever participate in that axe throwing thing we did at Unconfiscatable?
No.
Right. I took payments in Lightning Network, like $40-$50 per person, for axe throwing contest, because we had to rent the space and it was per person. And like, I think 8 to 10 people paid in Lightning and it all disappeared, all gone.
Well, it does seem to be stabilizing, and now there's 4,000 Bitcoin locked up in there. That's a lot of buying power for the Lightning Network.
Okay, so let's move on. And guys, after this, Mark will do his charts. This is going to be a long show. So this is Bitcoin in the liquid sidechain. I think the liquid sidechain is even more useful than Lightning, personally. I always did. I don't understand how no one uses the liquid sidechain. I always thought it was more useful because, first of all, it is a Bitcoin scaling solution so that you don't have to do a bunch of shit on chain. You can take it to a side chain so you're not clogging up the mempool. It gives you a 10x scaling on Bitcoin, so you can handle 10 more times the transactions easily. They are almost free to transact, so it's 10 times the transactions before they even start to, get expensive. And it's completely private. It's like Monero privacy, and yet no one uses it. So at the time, we had 3,866 Bitcoin locked up in the liquid sidechain. Let's see where they are today. I think this should be in DeFi area. Yeah. So the DeFi area, I don't remember what wrapped Bitcoin had, but liquid Bitcoin should be in here somewhere. There it is. Liquid Bitcoin is at 4,243. Okay.
So this is the Lightning Network, right?
Yeah, they're about the same.
Yeah.
But I want to see how much Liquid has increased. So Liquid is up, right? So Lightning is down, but Liquid is up. That's great, right? Because if we go back, we see 4,600 has become 4,100, but 3,800 has become 42. So more people are putting Bitcoin into the liquid sidechain, which is great. Okay. If people realize the power of the liquid sidechain, that could suck in a lot of Bitcoin, and it may stay in the liquid sidechain for a while. Okay, so that part continues in, because these are all bullish things that I don't see reversing yet. Now we get to the really good stuff. Okay, now let's see where we were and where we are. So here is the beginning of the prior bull market in 2017, and this is HODL waves. I don't have time to read what the HODL waves are, so we're just going to look at charts and compare. Okay, so this is what I was looking for, and making a presentation. The bull market is about to start with the halving, and let's see what we look like today. Okay, so keep this in mind. Early 2024, we were just starting to round like early 2017. So here is early 2017. And I was matching it to early 2024. Now, where did the market top? The market topped in 2017, right here when we kind of leveled off. We had a little bit of a weird peak with the crash, but then, we start to go down. So we have to level off, okay? And as you can see, we're still rising. It was interesting that this did not really have a proper rise in the last bull market, but in the 2017 market, we kept rising and we're still rising. I don't see this as a reason to be concerned with the HODL waves. I did that presentation right here. This is, what's the date on this? April. Yep, there it is, April. And we're still higher and we're rising and we have not yet leveled off. Now, here is the top of a market. This was not very helpful in identifying the top in the last market, but we're still rising. So to me, this is still bullish. So I don't see us stopping. In fact, this looks like it's accelerating to the upside, similar to what happened in 2017, just not as steep. And definitely rising better than it was rising at any point in 2021. Mark, thoughts?
No, go.
Still bullish to me. Closing HODL waves, moving on. Here is realized cap HODL waves, a little bit different. Again, you can see how we bottom out and start to rise, and we peak when these things start to decline. Okay, so we're going to go back to the current chart, so you can see how boom, we're starting to go up over here and over here. Hope you guys can see all that. And let me just make sure everything's good. Yeah, everything's good. Let's go to the chart. So here we are. So let's compare what we saw back. Oops. Let's compare. I'm going to close this as well, just so I can have the latest tab next to this tab. I can probably zoom this in, but I don't need to. So again, we have the 2017 bull run and the 2020 bull run. Here's the 2017 bull run. We're starting it right here. And then we're picking it up one more in this top green area for one final push. And then everything kind of tops. Same thing here. We started. We had one final push with this additional green. And it all kind of topped and then never recovered in the secondary top. Now let's look at the current situation. I did this presentation in April, right here. April. So we see the rise into this low green area. We see the rise into the second green area. And they're both still rising. They're both still rising. Again, I don't see a top here yet. Everything is still rising. In fact, we just added a brand new one that didn't exist. So to me, this is still a bullish chart. Mark, what do you think?
Well, so the other thing I'm noticing is actually the bottom side of the chart, where you have the orange rising into the highs, right? And we're nowhere near that right now in these current waves.
So this looks very, very bullish to me. And you can see how the last peak was higher than the prior peak in the orange area. And the orange area is just getting started. So, and you can kind of see that you need a lower high in the peak. This one didn't even get the lower high. It just crashed. So you always get higher peaks into the last one. So either this needs to peak at a lower level, or you need one more new swing high. I think we'll get one more new swing high. So to me, realized cap HODL waves are still indicating a bull market. Mark, you see the same?
Yeah. This will reflect also when we take a look at some of the higher time frame RSIs, which basically they haven't even gotten into a heated up zone yet, which is the one thing, along with just typical November cyclic, post-halving November cyclic TA, that has kept me from selling. I actually almost sold some Bitcoin for the first time in years at around 114K, but I'm kind of going with a little bit more cyclic analysis as well over technical for the time being. We'll talk about that a little bit later.
Yep. All right, let's talk about long-term hodler supply. This is going to be very similar to maybe that million addresses. So what am I looking at here? I'm looking at the peak takes place. So this was probably a concern of mine. We're starting to go down, but it goes down for a while, and then it peaks when this low is made. That's where the peak is. I'm really curious what this chart looks like today, and we're keeping an eye on what it looked like then. And my reasoning was, hey, this is just starting to go down, so the top is about to be made in the next 6 months, but it's now been a year and a half. So let's see what it looks like. Here's what it looks like today, and here's what it looked like back then. So back then, here's April when I did the presentation, and right after I did the presentation, that's when it leveled off, went up again, pulled down again, made a new low, pulled up again. So when this goes down, that's when Bitcoin rises in the beginning, and then it levels off. So again, you can see right here, that's the top of the market. And then, hodlers, start stacking again, and then they start selling at the peaks. So this looks actually very, very similar to what it looked like back then. It actually looks identical. The chart right now looks identical to the chart back in April. We were able to get through 2 of these. So this is one of those things that is showing a potential top in the market. But if this still needs to go down some more, so we still have some room, but this is showing a potential top. Mark, what do you see here?
Would you say that would need to make a lower low to be more confident, or no?
Yes, it would need to make a lower low for me to be confident that we top. But also, the low here comes in a little bit before the top, right?
Yeah.
So this is where it's a little bit tricky. Where right here they came in right pretty much at the same time.
Yeah.
So here it came in a little bit later, and here the low came in a little bit after the top, but they're in the vicinity. Here the low came in way later. And so this chart isn't telling me much because it's on the way down and it has already made a down move. So it's literally right here at the lows like we were back in April. And actually that's June, December 24. I'm sorry, right here, back in March, April. So this chart had already bottomed, but we were able to consolidate through it. And then when it starts to rise, again, that's when Bitcoin starts to fall a little bit, because that's when people start to, sell more Bitcoin. So this chart is a little bit in the middle of nowhere.
That current peak, shows kind of what I was talking about earlier, where it just seems like long-term holders had a mental price of 100K where they were going to unload anything above there, because the price has been sustained above 100,000 since that peak, and there's just been a steady decline. So any pushes into prices above 100K, those long-term sellers, we got those long-term holders selling, but it's going right into the hands of the ETFs.
Yep. I'm putting this chart in the neutral category, just like I did here. The reason why this is orange is because it's neutral. It's not telling me bullish or bearish signals. Let's move on. We're going through these tabs. This is our HODL ratio. So again, I'm looking for peaks in the ratio. This is one of those things, this is one of those charts where a lot of on-chain analysts were super bullish in the last bull cycle, and so was I, more for technical reasons. And that's because one of the reasons is this chart never made it to the top. This was a little bit of a concern that it looked like it peaked, but it's coming in way low. So I still expected this chart to go higher in the current bull market to make a peak. Really curious what it looks like today. And here it is. Here is that peak in, no, that's November, sorry. Here is the peak in April, right there. When I did the presentation, you can see that we did go higher. And now the price is even higher still. So this chart never made it into this red zone that caused a peak in the market. And I still think it's possible for this chart to go up. So because we're consolidating here, I think this chart has one more push to the upside. We may not make it into the red like back in the old cycles, but I think it has one more peak in it, which may or may not break the peak of November, December of last year. Thoughts on this, Mark?
No, nothing specific.
This chart doesn't look as useful as some of the others, but it still looks neutral to slightly bullish to me. It doesn't look like it's stopped. Next. This is, by the way, this is probably public, this presentation. If you're curious to like get these slides, all you got to do is go to Google and type Tone Vase Prezi, and you'll be able to find it. So this is the MVRV Z-score, and it looks very similar to the prior chart. Let's see what it looks like today. Let me capture it. So again, you get these peaks that are not as high as the prior one. This was the peak during my presentation. At the presentation, I said, hey, I don't think it's topped. I think we're going to have a higher peak. We did, and it looks just like the prior chart. But I still, this does not look bearish to me. I still see an upwards trend. Yes, we had a slightly lower high, but we're also dealing with a higher low. And I think this has one more peak in it, and I would love to see it get above 4, and that would mark a peak in this bull market for me. Next, we have a really good chart, advanced NVT signal. And to me, this was making lows, setting up for higher ups. Unfortunately, the website that I was using, I'll look into Bitcoin, this has been purchased by Bitcoin Magazine, and they made some of these charts private. And this is one of those charts that I can't see right now because I'm not paying them any money. And therefore, I can't analyze this chart. But to me, it was bullish at the time, leading to the bull market in this current 4-year cycle. But I can't review this chart, so we're just going to skip this metric. Next, we have miner revenue. This is interesting because we've had the halving. So now we have a lower level here. This isn't very useful because I have my own chart of miner revenue. And you can see how miner revenue has been reached a peak in December of 17, and it's making this incredible ascending triangle. How awesome does this chart look, Mark?
It looks pretty bullish.
This looks incredibly bullish, okay? And man, if this chart can break out to the upside, holy shit. Because the only way miners are making more money is if the price of Bitcoin is rising. So if you were a miner at the peak of 2017, you were making exactly the same money as you are now. And it is like, what, 10 years later? Almost, right? Like 8 years later, you're making pretty much the same money as you did in 2017. But there's way more competition. Way more competition. So you're making less money, I would think. So I think this is going to skyrocket.
This chart, the look of this chart coincides with a growth curve chart I have on Bitcoin that we'll find that suggests it's going to break to the upside.
Yep. Yeah, this chart looks great to me. And we got so much room before the next halving.
It might be after the next halving that it really takes off, but
no, see, that's the thing, right? When the halving happens, So let's add 4 years. So this would be 2028. So it'll be around April, May 2028.
Yeah, somewhere in there. Maybe
April. Right. So when mining happens, it crashes.
Yeah, it will.
50%. It crashes 50%. So this is to rise before the halving, and then crash 50% on the halving, but stay above the yellow line.
Yeah. The
yellow line will become support.
Yes.
In the next halving. So I'm expecting it to go up, crash by half, and then down to this line. This is a very logarithmic chart, guys. Super logarithmic.
Right.
It's not going to go up that high. It's going to go up to like here.
Yeah.
But very, very, very good signal. Oh, there it is, right? That's what it looked like. And I expected this to break out, but there was no ascending triangle at the time that I did this presentation. Now it's beautiful. Beautiful ascending triangle. Okay. Closing 2 more tabs. Next chart. Coin days destroyed. So this right here, when it skyrockets like that, it signals either lows or the start of a bull market, like the ending of a bull market picking up with some steam in an exponential way. This was a concern for me. That's why I marked it red. This was concerning because this is one of those charts that told me that, hey, the bull market, it may not have ended right here, but it may not have that much longer to go because the coin days destroyed is peaking. And I know it's peaked right here at the lows, but this is forced liquidations. Very, very different, okay, than this. This is more voluntary. This is more involuntary. Same thing right here at the low. Right here at the low, because if this was the FTX crash, this is more of an involuntary movement of Bitcoin. Some voluntary because some people want to pick up the lows. And some people are forced to sell and some people are jumping in on the crash. So it's these peaks that I care about. And this was very, very serious. Really curious what it looks like now. Interesting. So you can see, I wonder if I can like expand this. I can't. Can I zoom in? No. So here's where it was at the time. Here's my presentation. We were right down here. We then spiked again, and we've been yo-yoing without having much of an effect on the price. This to me does not look bearish at all. And I want to see one of these massive spikes in coin days destroyed. So this is telling me that while the strong hands are selling the peaks, they're not crazy enthusiastic selling the peaks, right? So remember what you said earlier, OGs are selling their Bitcoin to the ETFs. This may be true, but they're doing it slowly. And right here, they did it quickly. And right here, they did it less quickly. So no one is really jumping in to selling their coins at the top right now. And no one is really hodling. This is right in the middle here. And I think this is more bullish than bearish with this, constantly making higher lows. This is a nice coil right here. And I think it's more likely to break to the upside. And when it does, that could be your peak in the market. So that hasn't happened yet. So that is still bullish to me. Next chart, supply adjusted coin days destroyed looks very similar and it looks identical. So we're going to skip this. Getting to the end. This is the 200-week moving average heat map. Let's see what it looks like. has not gotten into the green, yellow, or red yet. So looks bullish to me. What do you think?
Yes, 100%. And again, the RSIs are going to show us a similar idea.
But we were right here doing my presentation, and we're a little bit higher, a little bit darker blue, but definitely not in overbought territory yet.
And look at the last cycle, the 65K peak got to the green. There wasn't even a red dot printed. So we were looking for a red dot. I was with you, Tom. We've talked about this on streams. The second peak at 69K, I really thought Bitcoin was going to 80K.
So did I, man, dude. If it wasn't for the mining band, we're probably topping in like August, September at 85K or close to 100. And then instead of these two peaks in the 60s, you get one peak in between them, somewhere in between 70 and 100.
But it would be such an anomaly to peak a cycle, a 4-year cycle, without even like printing one of those light blue dots, the turquoise dot.
Right. I think we're going to get into the green. We may or may not get into the yellow. But again, this was derailed by fucking China. Anyway, let's jump in. I'm not a huge fan of the stock to flow model. I never was, but everyone else seems to love it. So let's take a look. The stock to flow model is definitely lacking its prediction of 300,000. So let's see if we get to it. I don't believe that we will. I think this will need to be adjusted again. Thoughts, Mark?
I think it might catch up after 2028 halving.
But after 2028 halving, it's supposed to be like over 1 million.
Yep.
Right. So it'll catch up to this line, right? But after the next halving, because remember, this was already adjusted. This was supposed to be at 300,000 in the last cycle.
Yeah.
Right. So I think this will be adjusted down again because I don't think we're going to be able to go up that high. But yeah, I still think we have a little bit of room here, but not much. So, but I still think 150 is in the cards. Next, what do we got here? Reserve risk. Let's see what it looked like. We were just entering the bull phase, and we tend to peak in the red or at least halfway up to the red. Let's see what it looks like. We have we're still stuck in this green area. My presentation was back in April of 24. We were at the top of the range, and we're still at the top of the range. We never peaked. We just broke it by like a second. I still think we need to make a high in this area. I think we need to get to at least like here. On the oscillator. So that is still bullish. All right, let's see what we got. Next. Terminal price. Market peaks each time it hits this red line on the terminal price. We have not hit that red line. The red line continues to increase. The price continues to consolidate. This is a very bullish signal that we're not close. And currently the red line is at what price? Terminal price. Whoa, 200 something, 268. I think that's a little bit steep, but this is probably the most bullish chart I've seen so far. So that part's very bullish. We were, well, at the time of me doing the presentation, that looks like maybe 210, 220. Actually, I can find out. Let's see where that was in April of 24. April 20th, 24. April 22nd, 24, terminal price 138. We were at 138 when I did that presentation. Now we're at 268. We still have not touched the red line. This is a good sign. Very good sign. So very bullish. Delta top, again, we pretty much touched the purple or almost touched the purple. We came very close. But then on the actual peaks, we were far away from it. But this is almost a touch. Doesn't look anything like that in April. Let's see what it looks like now. Oh boy, we're now even further away from it. So we never even came close to touching the purple. The purple is also at 268. They seem to be at the same price. And this is another very bullish chart. Now let's take a look at top cap. We came up very short in the last top, so maybe this isn't as relevant. We touched it in all prior bullish tops. But again, Mark, had we had a proper bull market, we might have come closer.
Yeah.
And now we're not even close. This has us at 600,000. I think that's way too steep. Last time we topped, we came up, we were less than double. It was twice as high as the price of Bitcoin. Right now, it's 6 times as high as the price of Bitcoin. I think that's kind of crazy. And it's only going to go higher by the time we try to get to it. So we'll see. But maybe we'll get lucky. We'll see how it goes. Next chart I'm not going to have. This was a very cool chart. Bitcoin Cycle Master. But unfortunately, they're not giving me access to it. So I cannot.
I have something else very, very similar to that. We can take a look at.
And you will show that. And finally, for my last chart, this is the Pi Cycle top. I kind of ignored this thing in the last bull market, and that was my mistake. I'm not going to ignore this again. So this was Pi Cycle top and bottom indicator. They're no longer giving us a Pi Cycle bottom indicator. It's only the Pi Cycle top indicator. The one that has the bottom is also proprietary. So I was able to show you the top, and we are not even close. You need the orange to come and flip the green, and we're not even close. So the Pi Cycle top indicator is probably the most bullish chart we have, that the bull market is still here. Okay. So on this note, I am done. But we don't really need to see the bottom in this particular environment. That was my presentation that I gave at BitBlock Boom the week before the halving, and why I expected a bull cycle. And now I just reviewed it for myself and for you guys publicly, and I am still convinced that the bull cycle has not topped yet. And we're still in the 4-year cycle, because a 4-year cycle is a completed bull market with a top and a completed bear market with a bottom between the halvings, which are 4 years apart. And the halving is still 2.5 years away. So we got plenty of time to make a top and plenty of time to complete a bear market, make a bottom, and then start to rise into the next halving. So if you want to assume that the 4-year cycle is over, wait at least 1.5 years and then talk to me. All right, Mark, I'm going to go to us. And well, let's see how much time we still have, but I will give you the screen share now.
Okay.
And here it is.
I think I can get through this pretty quickly. One thing.
Let's just make sure you're talking about the proper chart that you're sharing. Yeah. I see a black chart with purple, blue, and green ranges.
Yeah. So perfect. I'll start with that. So the last couple of things that you showed, a simple takeaway is that there was an expectation that this cycle should go to $200,000. And I don't know if we will see that. I can make a very strong argument that there is still room in this market for the price of Bitcoin to double. And that's just simply looking at high time frame RSIs among a few other things. But the last 2 or 3 things that you showed were all showing us, you know, an expectation for the price to rise to 200,000 at some point during this cycle. So let me show you this right here. This has just been an outline that I've had for years, the last couple of years. Tone has kind of shed some new light on how to view the cycles, but I will try to explain the key to this really quickly. The green horizontals are the halvings. And then these shaded areas are all different timings. Okay, so let's talk about the bearish arguments first. Let's talk about the possibility that the top is in, and I don't know what just happened. There it goes. Because based on one metric, I had a potential, and this is why I love doing this show today, because this yellow vertical, if I said horizontals, I meant vertical, is a potential topping day for Bitcoin, October 27th. And here we are. And here's this blue kind of like guideline with the price just walking up it. So why am I saying October 27th might have been a time to look for the top? Well, I am looking at time after the halving to the last prior tops, which is this area right here. So last cycle topped 540 days after the halving, and the cycle prior to that topped 518 days. This cycle was accelerated in 2015, and it's hard to draw data from that because it did top early. So this is purely speculative, 100%. I just kind of like took an average of the 2 times after the halving to around 550 days, which we are already past the prior 2 cycles from this metric, as far as this metric goes. Okay, so what Tone is explaining is, okay, that doesn't matter because we're still within the period of the halving, and I could totally buy that argument. I'm just looking at cyclic norms that have happened in the past. Now this is interesting. Down here, I marked the period at the very bottom. These, let me zoom in right here. These blue shaded areas right here are to the top was 1,491 days. The top was days, and again I took a little bit of an average of those 2, and it got me to, we're at 449 days. So we're right within the window of timing the top from tops to tops. The other thing to look at and it is looking at bottoms to bottoms, and this is where Tone's argument probably holds a little bit more water. So that's the purple shaded area. Bottom to bottom was 1,421 days. Bottom to bottom of the next cycle was 1,428 days. Okay, so I've just projected a potential bottom into, let's just call it mid-October, mid to late October. What Tone is saying is, okay, he doesn't care that we're 550 days after the halving and we're coming into the same timing top to top. We're still within a halving period, and we could have a rise into April of 2026 and a bear market here and keep on going. I can buy that argument. What I'm trying to show is that we are within the window of parameters where prior cycles have found their tops. And do you have an opinion on that, Tone?
Right. So that's also the chart, right? We have actually passed the window where all prior markets have topped, but we did not come close to an exponential rise yet. So this is why, sticking yourself into this window that, yeah, all prior tops have topped here based on time, that's great. But once again, there's time and there's price. So time-wise, we should be topping. But price-wise, we're not topping. And that means time-wise needs to be adjusted. And I don't see a problem with a time adjustment because we have plenty of leeway. We still have another year before we can say the 4-year cycle is broken. But I need that exponential rise, and I want to see a top, sometime in the next 12 months.
So an argument could be made, if I'm just looking at post-halving to top, 364 days, 518 days, 540 days. So an argument could be made that these cycles are actually expanding and playing out to last longer and longer, even though we have seen diminishing returns. So, but I just wanted to put that. It's really interesting that we're doing this stream on the day where I'm like, hey, maybe the top is in. And as of before this move to spiking just a little bit above 116, I would have felt a little bit more confident in at least saying maybe there's a 40% chance that the top is in. I wasn't over 50% at all. But so that's just looking at the cyclic timing, okay? And if you're looking to buy some Bitcoin at a discount, who knows where the discount might be 140,000. I have no idea. It could be potentially in mid to late October. So here's one thing. I love always never scenarios. One thing that has never happened in the history of Bitcoin, it has never traded below the price where it was at the time of the presidential election, and which I'm pretty sure was around 64,000 or 65,000. It might be 69,000, but that would suggest, if that pattern stays, that would suggest that these highs that really started the consolidation in March of 2024 of 70,000 will never be taken out. Okay. Do I feel confident in saying that? Not yet. But I'm kind of tracking the potential next bear market currently to be at around $70,000, and that's based on the rise of the weekly 200 moving average, which we can take a look at. So now let me just switch over to this tab. So Tone, are we looking at the CoinGlass bull market peak indicators?
I mean, you can.
But is that what you're seeing right now when I switch tabs?
Oh, no, you can't switch. It has to be in the same window. I still see the same chart as before.
Okay, hold on.
If you bring you can't switch windows. If you bring that tab into this window, I'll see it. Oh, I'm sorry. I'm looking at YouTube, not on my bad. I should be. I do see it. Yes. I was looking in YouTube, not in our streaming software.
No problem. So this is just a CoinGlass website showing bull market peak signals, and right here we've got hit or not, hit or not, hit or not. I'm not going to go through all of these because Tone basically just kind of did that. However, let me refresh this just to make sure. Yeah, 0. So far 0 hits on whether these indicators, some of these are fundamental, some of these are technical. There's 0 hits. Okay, so that's a super strong argument that there's still fuel in the tank for this bull market. Now let me go to Consensio. I still love Consensio on the 4-day. I have not abandoned that. I think it's been absolute money. It gave us a bit of a warning right on this drop, on this cross. It said, okay, this is what I've been telling my friends. If you need cash, anything into $114,000 or $116,000 is a sell until we see strength. If you need cash, I'm not saying the top is in, but Consensio gave us a perfect place right here on the last candle as the moving average. And I don't have all 3. Let me highlight all 3. I do. Oh, there it is. Okay. So basically, Consensio goes bearish on this when the blue and the gray moving average cross below the black. Same thing here. So this last signal at 69 at the 106,000, 110,000 top, it gave you a chance to raise some cash at 95,000, and if you were brave, you could have bought $75,000. That's a pretty good trade for a long-term swing trade. Now, look what's happening though. Current candle is about to close above the long-term moving average again, which I'm going to look at as bullish. And if we put the MRI on there, it's going to be a green 2 candle. So next candle is potentially a swing long, according to Consensio, get back into the game. And again, here's this magic number, 116 number. Why do I keep going to 116? Because that was the prior swing high that we'll look at on daily. Now, really quick, I just want to show a really simple metric that I use to figure out, are we still in the bull market? Are we still in the bear market? I take the Consensio long-term moving average, which is a 30 simple moving average, 30 SMA, but I put it on the 2-week chart. And it's one of the cleanest signals that you can look for in Bitcoin. And so far, all that it has taken in every single bull cycle is one close below. Here we are in 2014, close below, bear market. Here we are in 2018, one close below in around $7,000, bear market. And looking ahead at 2021 or January 2022, close below 44K, and we're out. Here's the amazing thing about this particular cycle. If the top is in, $99,000 is the time to get out. So we would have a chance to exit the market very, very, very close to the top at 125K, which we've never been afforded that possibility before. But generally speaking, I can't be fully bearish if I'm seeing the price still hovering well above this long-term moving average. Do you have any opinions on that, Tone? Just bullish, right?
This looks very bullish to me.
Very bullish. There are a couple.
The only thing that would make it more, the only thing that's concerning is in 2024 and 2025, we came back and almost touched the black moving average, but this time we did not.
Yeah.
So the only thing that's concerning is we may consolidate 6 more months for the moving average to catch up and then shoot up.
So let's just take a look at this last 2-week close, because we got a 2-week close and a 3-week close, and that actually kind of shifted my bias. This is a strong potential reversal candle, even though it closed red. That's a huge wick below. And when I turn on the MRI, we're going to see that this candle is currently red 1, 1, 2, 3, 4. It will flip. It started green. As soon as the price gets above 115,400, it'll be back to green 1. And then if the price is anywhere above 112,000 in the next 3 weeks, we're going to have a green 2 on the 2-week chart. And the 3-week chart just also printed. It is an MRI top, and we got a nice drop on that. So now the question is, was that the top? Or are we going to consolidate, as Tone is saying, and take out these highs?
I think we're going to consolidate, print a green star candle, and take off.
So let me stick with this 3-week chart, because this is one of the most important things that I've been following. I'm on Consensio. Let me go back to this one. Okay. Here's another reason why 112,000, I just mentioned 112,000, is very, very, very important, because this is the 3-week chart, and we can look at this late in the cycle. Now let's assume that we're going to peak sometime in November, December, and stick within the norms of the cycles. as Tone is suggesting, this could push into 2026. I could see this cycle pushing no later than Q2 2026. But there's evidence in the charts and in the MRI to suggest that this can sustain at least into Q2. But let's just assume we're going to find a top sometime in November, December. When we get into November's, when we get one close below this short-term moving average, this is an 8 EMA on the 3-week chart, that's it. And if I go back to the last cycle, same thing. We got one close below there in 2018, and it was a bear market. And same thing all the way back in 2014, one close. That's all it takes. Now, will that pattern hold forever? Probably not. But I will tell you that I will not be as bullish as I am right now if this next 3-week candle is closing red below $112,000. Do you have any concerns over that, Tone, or are you okay with that?
Can you go? Shoot, I'm looking. Let me move the screen over so that I'm looking at you in real time and not on the thing here. Okay.
So I was explaining that this short-term moving average, the orange one right here, has at this time in the cycle, getting a close below it has been detrimental to the bull market going back through.
Yeah. But we're closing above it, and we're just starting a new candle.
Brand new candle. So what I'm saying is that if this look, November has to be bullish in my opinion. I mean, it doesn't have to be.
I agree.
It statistically, historically, cyclically, it has to be bullish. We have to see a rise with this candle closing at least somewhere up here. Closing red below 112,000, I will be a little less bullish than what I am right now. Now, this is what is keeping me bullish. When I go to the RSI, and I'm going to put my drawings on. So we can see if we go back to the very beginning, we kind of have these peaks right here. They're lower highs, lower highs, lower highs. But look at this particular cycle. This cycle has never seen the RSI. It got rejected. This is the 75,000 top in March. It got rejected at 80, which you can see is normal. Like getting rejection here at the 80 RSI is normal for a big correction, and then bam. And this is the argument why I say the price of Bitcoin can still double from well over 100,000. And it sounds crazy, but I don't give a shit. Like, it's just what the charts say. Now I am going to draw a triangle here, and this last candle saved Bitcoin's ass because the RSI was breaking below this triangle by a fair amount until this last close. So now, and this is what a lot of the stuff that Tone was showing us, it's a coiling. Everything is coiled for some kind of a big move. Either the top is in and we're rolling into a bear market, or we still haven't seen the strong phase of the bull market. And what I am looking for is for this next 3-week candle to get above this gray moving average and start to push through the top trend line. And then what we need to see is hopefully RSI even pushing above 80, because I'm not going to go through this. We don't have time. Just take my word for it because I've studied it. Every single time that Bitcoin has popped above 80 RSI on the 3-week chart, the price has doubled at minimum every single time. Now, what's the bearish argument? Well, we have RSI peaking at 80, peaking at 75, peaking at 71, 72, 71, with all-time highs of 75,000, 110,000, 125,000. That's called bearish divergence, right? You've got higher highs in price and lower highs in the RSI on a very high time frame. So when the 3-week chart confirms a top, which it really hasn't quite done yet, I'm going to look for a bear market. I just have to. all the oscillators are still a little biased to the downside. The stochastics need $121,000 to get bullish, and the RSI is going to need $121,000 for the for the RSI to cross back above the moving average. So we're still in a little bit of a nebulous territory. Now let me go to the daily real quick, because I was looking at on the Bitstamp chart, actually. Let me go to Bitstamp real quick. Okay, let me just expand this. I drew 3 horizontals yesterday. And Tone, this is important because I want your opinion. Hold on, I might have to go get batteries for my mouse real quick. But okay, why did I draw these 3 horizontals? Because we got 3 key wicks on the daily chart. There's the high, there's a low, lower high, lower low. We need a higher high, and we had this wick, and this wick. So Tone, my question to you is, this current daily candle has swung above that prior swing high. So do you consider this a new swing high, or do you need to see something else?
No, I need a close.
Yeah, that's what I was thinking. So, and Matt covered this earlier in the stream. We need, this is a green 8 candle with an MRI warning. MRI top might come.
No, it's definitely going to come. 100% tomorrow. Like 100, not even tomorrow. 100% it's coming in like 7 hours, right? The only way it's not going to come is if we crash like below 111.
Right. So even though we have swung above 116, which is bullish, I personally would like to see at least a daily close above this high of 115.3, but even better, a daily close above this prior swing high. Now, if that does happen, now we have a higher low. We've got a low, a higher low, a higher high. So the next dip is a buy.
Right. Now, let's be clear.
Yeah.
This doesn't have to happen today. It just has to happen in the next 5 days.
Exactly.
Right?
And,
and I think it would be perfect if we don't get that close, we pull back for a few days on the MRI top, don't fall below 112 next week, and then break out going into the weekend.
Okay, so there is a gap. I know Tone isn't a CME guy, but I am. There is a gap.
I heard the CME gaps are going to disappear because I heard they're going to start trading at 24/7, like they were supposed to do the whole time. So again, Tone was right to ignore the fucking gaps.
Well, this is what I'm viewing. Any drop to fill the gap at around 111, 110 that holds is mega bullish for me, because now we've got a second higher low, and I feel pretty confident that this 116 top is going to get taken out. Okay.
Also, the look of this gap has breakaway gap written all over it, right? Very similar to the gap on the 29th. But even though that gap technically did get filled later on, but there's no way anyone's assuming that gap's getting filled on October 7th. You're like, I missed it, right? Like this is the thing, right? Like this is another reason why I don't pay attention to the gaps, because someone can tell you, yeah, it'll get filled. Yeah, maybe in 3 years. What do you want me to do? Stay in a short trade? Like,
yeah. So what Tone is saying is, if you're expecting this gap on the 25th to fill that week after being a huge breakaway, well, look, you missed the move from 111 to 125,000, and yes, it did fill eventually October 16th. So with this big of a gap, we might only see a small correction on the daily, 1, 2, 3, 4 days, and then a pop back up. And maybe this gap gets filled later in the bear market. I don't know. But it's just a price range that I'm interested in.
It has a good chance of getting filled in the bear market, right? But like, what does that mean? You're gonna lose all your money trying to short into that gap.
Right. Okay. This is an investor mode chart. It's very simple. It's Heikin-Ashi candles with two moving averages, 26 and 12 EMAs. These are not my moving averages. I think these were taken from MACD readings. It doesn't matter though, because this chart has been really good. Yes, it's gotten whipped around a couple times, but that just gave you a chance to like be defensive. We have not gotten an exit signal on this, because the exit signal is when the red moving average crosses below the black and you get a red candle close. Then the strategy, like let's look at this last one. The strategy is to sell into the cross. So this gave you a chance to get out at 91,000 and buy at 75,000, similar to what Consensio did. This is a very similar reading to Consensio. So it's 7 hours. This candle is probably going to close green. It would be awesome to see this candle close back above the red moving average, but we'll see how it settles. The Heikin-Ashi isn't going to settle till the close. Point being, this is not an exit signal yet. We are not getting a cycle top signal on this chart. Let's go back to the last cycle just to see how this played out. Here's the $69,000 top. We've got the bearish cross didn't come until mid-December. We're almost getting that bearish cross. We were almost getting bearish signals very early in October. And there are a few bearish signals I'm going to show really quick. Maybe we'll try to call it a day after that. But here is your exit. Here's how the strategy works. You don't panic. You don't panic on this capitulation. You just wait and hope that you get a bounce somewhere in here. So this gave you a chance to get out of the market at $52,000. So what is that suggesting right now? That is suggesting that if we get a turnaround in the price and these moving averages do cross, it's going to give you a chance to sell / exit, scale out around $112,000, which is just barely off the top, which is making Tone's argument. We haven't seen the parabolic run. We haven't seen, unless this is some kind of distribution pattern, which it could be. An argument could be made, depending on volume, that this is what they call UTAD. But all the other arguments can be made that this is a spring in accumulation at 103,000. And Wyckoff is very clear when it's over with. I like to track Wyckoff, but I don't make any strong decisions over it. Now, really quick, let me find that Mare multiple chart. Hold on, I'm getting there really quick. Here it is. Okay, so Tone, this is along the lines of that one chart that you didn't have access to anymore. These are all handmade multiples of the black, which is the 200 simple moving average, and I did it best fit over the cycles. There's not a lot of science behind this. It's just literally best fit, and I kind of guided it towards weekly, 4-day, and 5-day to kind of get an overall weekly look. So we can see the diminishing returns very clearly. March 2013 peaked all the way up at the gray, which is a massive multiple. I don't remember what I have it set at. The next cycle in 2017 topped at the yellow, and this is why Tone and I and many of us were like underwhelmed by the last cycle, because if we're going to see diminishing returns, we should have at least seen orange, either here around 85,000. That's where I was looking, 85,000, or even higher than that at 125,000. So now, where has this cycle gone to? This cycle hasn't even peaked up to the red yet. which is currently at 294. If the green was the peak, we're skipping 2 levels and not even getting to that, right? I still think this green can get tagged. It's $184,000 and rising. It's a little bit higher than my target. I had $155,000 as a price target that I'm sticking to so far. Tone, I think, is similar. But if we're looking at a step down here, and let me go to the 4-day chart. All right, so I love seeing this. The last cycle topped at the red. Again, we still haven't seen the green tagged, but look how the price is basing off of this blue multiple right here. We got another strong hold, which is keeping $150,000 in play. As long as the 4-day chart at this point in the cycle is holding these closes around above $108,000, then I'm still looking up to $150,000. How does that look to you, Tone?
I think we are going to cross into the purple. Where is that purple at? It's hard for me to see. The 140.
50K.
150.
Yeah, 149.7.
Yep. I think we're gonna hit it again.
And then here's same multiples, nothing changes. We're basing off of the purple multiple. That's held at 109. This is why 108, 109 to 112 is a really key range right now in order to hold the bear market up. Even though the TA says it can sustain down to 98,000, I want to see 108 to 112 holding at this point. And if it does hold, same information, we're looking at the green up at around 153,000 to get tested. The last cycle peaked at the orange. Second top didn't quite make it to red. So I was looking for at minimum this cycle to peak at the green, which has not happened yet. And then maybe for now we just call it a day, because we can maybe do another one. Is let me find my fib extensions. Here they are right here. Okay. Now, this is an interesting look at Fibonacci's that people don't really look at. If I go on the settings, down here, it says fib levels based on log scale. I have that selected. The standard, I believe, is not to have it selected, and that changes the way the fibs look. This way is how most people look at the Fibonacci's, and really rightly so. And I've had conversations with Fibbo Swanee over this. Fibbo Swanee makes a living trading off of this setting without the fib levels based on log scale. However, sometimes there are cheat codes hidden in here. So look at the last cycle. The last cycle topped right at the 1.618 fib zone. The first top at 65K was right on it. I'll put a red horizontal right on there, and you can see how clean that is. Bam, right? So what is that telling me? Well, if we're going with diminishing returns, it's possible that this cycle doesn't quite get to the 1.618, but maybe top somewhere at least to the 1.414, which we still haven't seen. And that is currently at 131,000. I think that this cycle can top somewhere between excuse me, 131 to 180. It's just below the 1.618 if we're going to keep with diminishing returns according to this theory. Do you have an opinion on that, Tone?
No, it looks good to me, but I just don't understand what the difference is between Fibonacci's and log scale and not log scale. They're the same to me. I don't know why people have. I don't even know why that setting exists.
No, it gives you different readings, and I've back tested this on various markets. they are respected on this. It's just the other way is how people view the markets more clearly. And look, we'll take a look at that right now. Let me just put these on normal, and I'll show you. So the last cycle peaked up here. Let's just call it at the 3.618. Let's just keep it simple. And this is going to explain why I've been looking for 150,000 on this cycle. All right, so now let me switch these. Let me switch this one to the normal setting as well. Okay, here we are, 20,000 top down to the bear market lows, and we get a reading of the 3.618 at $62,000. And if we look to the right, let me put a array on there. If we look to the right, bam, that the price could never sustain a close on the weekly or the 2-week chart above the 3.618. Yeah, that we got some spikes above it, but that was basically the top. So if I'm going with diminishing returns, I'm going to look at the next layer down, which is the 2.618 for this cycle. Where is that? That is right here at $159,000. Well, let me make this a little bit more clear. Let me at least do wick to wick. I'd almost prefer to set the Fibonacci like this. And I like to be conservative in my looks, so I am going to do that for this particular cycle, just to get a conservative target of $140,000, which is about where Tone Base has been saying he's looking as well. And as you can see, the price, now Tone, the reason that I'm setting it this way is going along with how Fiboswani kind of, he looks for inflection. So this wick at $63,000 got sold off into. We never got a close above $63,000. 3 more wicks. So this is a psychological price range where people just weren't happy seeing the price go higher. This area at 16,000 was a nice base. So it gives us a very conservative look at the Fibonacci extensions, bringing it to 120. Now look, this so far, this cycle has topped right at the 2.272 on the normal standard settings for the Fibonacci's. So that's going to be expected resistance. This is an area that in the Telegram groups I'm involved with, we were looking at 125,000 as strong resistance until that Fibonacci can get picked up. And if it does, I am going to be looking at 140,000. And as long as we're holding this 111,000 range now on fairly high closes, I'm okay. I'm still going to be looking for this 2.618 extension. What are your thoughts on that, Tone? We could probably wrap on this idea. We could look at more, but this is
yeah.
good.
I mean, those have been my targets, right? So my front target for this bull cycle has always been 142 to 162, and that covers that Fibonacci line. And if we're able to break out above the 162 area, now my target is in the 210 range.
Okay,
so there should be another Fibonacci line up there.
Okay, so now let's talk about breaking diminishing returns this cycle. Okay, let's go back to the prior cycle I showed. Let's just use this as an example. There are many ways, there are arguments can be made, but let's just use this. This is the 3.618, which we're assuming was the top. So in order to break diminishing returns, we have to beat the 3.618 extension this cycle, which would mean Bitcoin would have to roll above $188,000. And as I mentioned before, I still think the price of Bitcoin can double based on the RSI. But we have to get above 116K, and we have to get above the prior all-time high for me to have stronger conviction in that. But that would suggest that making this move up to $188,000 in this cycle is not unreasonable. Do you have an opinion on that, Tone?
No, I think it's possible.
Yeah, I do too. We're just kind of stuck in this consolidation range. You can see right here. This is going back to July. The price has just been stuck, peaking wicks and closes at $117,000, which is exactly where the price is stuck right now, below. So the early November, end of October, early November is a really critical time for the halving. One more thing, and then we'll call it a day. I do want to show you the argument that the top is in, but also the argument that Bitcoin is maturing, and then that will be it. Now I'm going to go to my EMA, SMA crosses, and we're going to take a look at the weekly chart, and I'm going to show you why I'm cautious. So look, prior to this cycle, every single time, the light green, which is a 55 EMA, and why 55? Because it's a Fibonacci number, and the market loves Fibonacci EMAs and SMAs. Fibonacci number sequence. Fibonacci sequence number. Every time the light green crossed below after a cycle peak, that was it. Bear market, bear market, bear market, and even COVID, bear market. So this was actually something that showed me Bitcoin is acting more mature. Right here in October 2024, that bearish cross came, and I was paying very close attention when the price was right here at 65,000, because there was a chance that we could see a collapse in price to rebuild. This was the very first time Bitcoin held this cross in history, which happens in traditional market assets with high market caps. So that's a good sign, okay? Being said, this cross is in place this late in the cycle, and it's a little bit concerning. There's one moving average to guide my TA, and it's the 34 EMA, which is the next Fibonacci number after the 21 and before the 55. And where is it coming? 108K. This is why 108K is so important right now. 107K. If we get a weekly close below the purple with this cross pending, we're going to see 99,000, and that this late in the cycle might not be good. But as long as we are sustaining weekly closes above the 34 EMA at 108,000, then I'm negating this cross for now, and the price can easily go to new all-time highs. It's just very dicey. And there's one more cross that we'll look at on the 2-day chart that's freshly confirmed, bearish, which is the 200 EMA and the 200 SMA. That, as we can see, also just crossed bearish. Price sustained, sorry. I've been dealing with bronchitis. I have this ridiculous lung thing. Price held this cross in right here in April of 2025 perfectly. But if we see it this late now, let's go back to the last cycle. We got that bearish cross in November, late November, and we go to the cycle before that. We got that bearish cross in the summer. It took a long time to get that cross. Now, how do I manage this? Well, I find the one moving average that I need to look at that's going to get lost, which is probably, yeah, I would say this one or this one. There they are. Again, these are all Fibonacci sequence. This is the 144 EMA. This is the 89 EMA. So the TA is very simple. Hold $103,000, but even better, $109,000. And that cross below is, we're not going to worry about it at all. But if I start seeing 2 days close again back below $110,000, I'm going to start looking at 103. And if that happens this late in the cycle and we're getting the price pulled down to $97,000, I'm going to have a little bit more confidence to say that this 125,000 was it for the top. So to wrap it up, my views are, as long as Bitcoin is holding at minimum $103,000, we're good. Preferably, I want to see above $107,000 to $110,000 on high time frame closes from here on out. And that will have me looking to have this swing high taken out and looking at new all-time highs. Tone, real quick, let me ask you this. Look at this current 2-day candle. What is your, if this 2-day candle closes above this high, is that good, or do you still want to see this?
No, I need it above that. I mean, actually above that, right? I need it above the prior swing high, like the prior swing high. So I needed, can you make the chart so I can see more candles? No, the other way. Right. I need this somewhere in between. Yeah, I need it above that. I need it somewhere above that high, and then I'm happy.
So Tony and I are bullish, mega bullish for new all-time highs. If we see those support levels that I just mentioned hold, and we start to see daily closes above somewhere between 116 and 118K. I think if we see daily closes above 116K, I'm going to start to get more bullish. And then I think the probability of new all-time highs increases significantly above 118,000. And that's good enough for now. We've had a nice long stream. I guess the final result is we don't believe the top is in yet.
Yep, I do not believe the top is in. We are in consensus there.
All right, perfect.
All right, let's get off screen share real quick. And hey guys, thank you so much for watching. It was a way longer show than usual. Went on for 2.5 hours. We covered a lot of topics. Matt presented his take with alphanumerics. I covered the markets. I then went through my thoughts on whether the market top is in. I don't believe that it is. Mark gave you some of his charts, and he agrees with me that the market top is not in. Mark, we'll have you on again in a few weeks, or hopefully it will become a regular thing again. And thanks again for joining. And do you want to plug anything? You guys, you and a few guys launched a subscription service. You'll be doing more about that as well. And hopefully, if you want to plug that real quick.
Yeah, well, I'll mention that really quickly. As you know, I've never showed anything with Tone. I just like showing up and we just like talking about what's going on. And this isn't a show. This is actually like a group of 4 of the best analysts that I've come across, with Tonebase included. Just trying to guide people through the cycles, not necessarily for daily trading, but for like investor mode trading. And man, these guys are spot on. And when our levels align, which is almost 90% of the time using like 16 different metrics, it gives me a high level of confidence in what we're looking at. So yes, we are going to be starting a subscription service. More information on that will come out. We will have a Telegram channel where we will be sharing videos and charts and all kinds of information. So I'm super excited about it. I think this is going to be the best content, focusing hyper on Bitcoin, and we will look into traditional markets as well. So if you're interested, stay tuned.
All right, perfect. All right, guys, thank you so much for watching, and see you all.